So say you took down, let's just say 4 Bitcoin, right? So 65 times 4, so we're at $250,000. And hell, I want to pay my house off. I have $35,000 on my house, so I borrow against what I already owe. What do you think my interest is? That pretty variable, or is it pretty standard there when you're going back?
It's definitely variable.
Who's writing that loan?
Yeah,
a person?
No, it's going to be an institutional, investor. So typically, it's actually a company that's got private equity and venture backing, and not like a bank. Some banks, will do this kind of trend, but it's the very rare situation where you can actually get a bank to be the counterparty on that kind of situation. And the interest rates are a little bit higher because there's a little more risk there, right?
And a little more unknown.
There's a little more unknown, but really there shouldn't be risk because they're 100% collateralized.
Yeah.
You're putting up, and sometimes they're 125% collateralized.
So it's fake risk. Like anybody trying to make money, they make it seem a lot more risky than it really is, so they can charge you another point or two.
Exactly. I mean, the only real risk is the price of Bitcoin starts to plummet, and they don't liquidate you fast enough to, you could see a significant drawdown in the price of Bitcoin, and that loan could, your collateral position then looks a lot different. It looks like more like 70%.
Yeah.
So there's some risk there, but it's definitely not, priced in. There's way more risk for the lender, these big banks that are lending at like 1.5, 2%, whatever, close to the Fed, the Fed rate, because inflation's 6% right now.
Right.
So like the only reason they could do that is because of quantitative, easing, because of what is it now, like $150 billion a month,
right,
that the Fed is buying, basically printing.
Right. Do you think that inflation is an unintended consequence, or do you think that anybody in the know knew, whoa, we're giving away free money here, no one's working, the economy is collapsing, this is not going to be good in a year, let alone 2? Or it was just everyone just grasping at straws, trying to keep
I think that's
peace
more what
in
it
the
was.
streets.
Yeah, I do think that the Fed chairman and the members of the Federal Reserve have decent intentions. Maybe not like holy and pure intentions, but decent intentions. I just think they're caught in a political cycle where nobody wants to turn off the tap. Because if you start turning off that QE and turning off the money presses, then your administration is blamed for a contraction. So we have to continue to increase the money supply. It's it was pretty small. We thought it was crazy in the 2000s, right? We thought that like, oh my gosh, I can't believe the deficit is $1 trillion or whatever. To think about some of these early stimulus packages in the .com era, or like, the early 2000s, even the 2008 financial crisis. Wasn't that like a $800 billion
somewhere in there?
Yeah, $800 billion stimulus package bailout for the
bailouts for the big banks
and automakers.
Yeah.
$800 billion is like child's play compared to what we've done over the last 2 years.
Yeah.
And I think it spans administrations. It's Trump administration, Biden administration.
They're all politicians.
Politicians. I mean, the next administration, doesn't matter if it's Republican or Democrat, they're going to keep the taps on.
Right.
And again, I don't think it's nefarious. I think they just know, like, we can't stop. We can't stop the train, which is why Bitcoin is such a big deal. It's a hard asset. It's a hard money system that is unlike anything the world's ever seen. I mean, it's similar to gold, but it's better than gold because it's more efficient.